Hey guys, and welcome back to the channel. Today I'm giving you an entire stock analysis on Capitals and Counties Properties PLC, short for, or the ticker symbol is CAPCO, C-A-P-C-O. This will be a three-part series. In today's video I will be talking about the company overview, so I'm just going to tell you what the company does and so on. Tomorrow I will release the second part of this series, and that will be talking about the impact of the 2020 crisis that we've all been experiencing in the past 7 months. And lastly, I will be talking about the outlook of the company and my thesis of this company. So let's start with a company overview. So, Capitals and Counties, actually better known as Covent Garden, because the majority of what they own is called Covent Garden. This is located in the heart of West End London. So, where normally, if you invest in a real estate business or not, or a REIT, then you would have them invest in a certain business, like either retail or houses or and so on. You can list them all. But Capital Counties is focused on a geographical location, and that is West End London. So here you can just see where exactly they are located, and here are a few things that actually tells you how much buildings they own, how much units, and how much square foot lettable space they own. And landmark estate with global recognition, like it's very famous, it's like it's quality real estate. They have a scale and concentrated ownership, rich in heritage and culture, and attractive open air environments. Throughout this videos I will show you a few of the pictures of the estates that they own, and that will give you a better visualization. So as I mentioned, they are focused on a geographical location and not on the type of real estate they invest in. That begs the question, what kind of real estate do they invest in? And that is shown here. So here we see over 1.1 billion pound is invested in retail, and then 430 is located for food and beverages, and then you have almost a similar amount, a little bit less, is for offices, and then a little bit under 200 million pounds is used for residential, so houses and apartments I reckon, and 77 million is just leisure or other types of business. So from a real estate perspective, this is not very focused on a specific real estate class, or real estate asset I should say, but maybe that actually makes this an interesting one as well, because you don't get as hurt as an entire retail investor would. I do have to say that over half is retail, and retail did get hit just as hard or similarly as hard as food and beverages, so the majority of what they own got hit hard by this crisis. But it is nice to see how exactly they have located their real estate assets. So just a quick overview of their capital allocations. This is just from their investors presentation, and something that you like to focus on is this disciplined approach to investment, returns, and capital efficiency. And the thing I like the most about this is this part: acquisitions on or near Covent Garden Estate, other central London opportunities. In the second video I will go more on these acquisitions, but for me this is important for any company that they are looking for a way to grow. And in real estate you can either grow through valuation of your assets, of course, but you can also acquire more assets. And the fact that this is in their spreadsheet and they want this actually gives me the idea that they are focused on growth. And yeah, well, you can read the other parts like dividend distributions and shareholder returns. Like I'm not that like these have been put to a halt because of the crisis we're in right now. But other than that, like I'm not a dividend investor. Like I care about the undervaluation more than any sort of dividend that they would give us. But it's nice to see what they do. This part, just to get a little bit on it, is like development, repositioning, and asset management opportunities. This means that they also would develop certain real estate projects, or they would reposition them after buying them, and so on. So they are quite versatile in this area that is called West End London. So this is going to be more important when we see the actual share price, but right now we see a net asset value per share of 241 pence. That is a decline of 81%. 18%, sorry, I said that wrong. And this is obviously substantial, and I can even say that this is not the first drop that they've experienced in net asset value. So valuation wise they have taken a hit, but the share price currently is around 110 pence, so you still get a pretty steep discount for quality assets, quality real estate assets, in this case located in the heart of London. They have a liquidity of 660 million. This does not mean that they have 616 million in cash, but they also have, like the GOC, I guess, they have the ability to withdraw some money from these undrawn facilities. We'll get to that later. The portfolio value is 2.3 billion, and underlying earnings per share is 3 pence. And if you look at the latest, like if you look at Yahoo Finance or something, you get a way different number, but obviously these are adjusted for real estate businesses or REITs. And this is just a figure, net debt to gross assets, to show you, okay, how much are they leveraged for whatever they buy. And if you know real estate, you know that people like to buy houses with mortgages and stuff like that, or any kind of mortgage in that regard. This tells you that they have a very low leverage ratio for whatever they own. So from a balance sheet healthy perspective, this is a very good sign. Something that I always like to see in businesses is that the company is focused on cost reductions, because you can create the biggest difference in your personal life by reducing your cost, and a company can do the same by reducing their cost themselves. And here we see that the cost for the administration, so G&A, was £50 million in 2016. Right now it's about £33 million, and the target in 2 years, or like 1.5 years from now, could be a little bit different, I reckon, because of the crisis we're in, is 20 million. So that is a pretty steep discount, especially when you think about how much rent they are receiving. So this will really help the company's bottom line. Finally, on this part, I want to talk a bit about the Zone A rents, and this is just a reference for real estate. You can classify any real estate asset into different zones, and Zone A is then always the most important part, and afterwards you can calculate, in this case, so in terms of Zone A and then per square foot in pounds, then you basically know how much money you can ask for rent when you lease or you rent out the specific real estate. Like, I can't say business or something because they have all these different kind of assets. And all in all, I think for anybody who likes real estate investing, this just takes some time to understand. Like, you should Google it and just learn a bit about it. But what is interesting about this sheet is that you can actually see the different names of the assets that they own, and you can see how the valuations go. So overall, this is their asset distribution, and Bedford Street is very low in this regard, what they can ask for rent, but James Street is extremely high, and higher than Central London Prime. So they have a very famous street that they own, and yeah, that is something to take into account when you're buying real estate, because I myself am quite unlikely to buy real estate, in the sense that I don't just want to own any real estate, because, for example, I do believe commercial retail real estate will go down because of all the technology and stuff that everything going on the internet and ordering and stuff like that. But in like these famous places, I don't think it will go away, because there's always going to be some famous company in that moment that wants to have a spot there just for branding, for example. So in that sense, I really like that they own this part, and Market Building and King Street as well. pretty good assets. So on to the share price. So at the end of 2015, which is almost 5 years ago, the share price was located at around 450 pence. And then the Brexit happened and everything became uncertain and the share price dropped. And it has been undervalued for a while, and I believe I opened my first position here, and this was in 2019. And afterwards, what happened? Well, the 2020 crisis happened and the stock crashed even further. So right now we are, in 5 years time, we're at a almost 80% discount to what the share price was back then. So I'm very happy I never invested in this company on this side. And but it does beg the question, do we have an opportunity right now? And if we look at recent insider transaction, and this is from yesterday, we can see that 1, 2, 3, 4, 5, 6 insiders, and you can check these names in their presentations as well, like Ian Hawksworth is the CEO, Ian Hawksworth. Situ, I believe, is the CFO, and Michelle is commercial officer or something like that. I'm not entirely sure about her title, but she is like the officer of Covent Garden in particular. And regardless of the amounts that they're buying, they are buying right now at these prices. So, and they are insiders, they know more than us. So however risky it looks, 6 of them have the confidence that this is a safer bet than putting your money in a all-world exchange fund, an ETF. So this is a very decent sign, and I would almost call it a signal, if you are ever interested in this company, that this is a signal to buy the company, to buy shares of the company. And lastly, something interesting that I would just like to mention is that in 20 November, the Norges Bank Investment Management, they acquired a big stake of Covent Garden because they want to own the real estate in London, which just shows that these kind of real estate is like people are eager to have that. It's people desire that stuff, and they bought like a big amount and they paid this price for it. And yeah, right now you can get it at a 60% discount than Norges Bank Investment Management. So that's also a decent one to keep in mind. So as I mentioned before, this is a 3-part series of capitals and counties. Part 1 is company overview. Tomorrow I will be sharing with you the impact of the 2020 crisis, and the day after, on Thursday, I will release my outlook and my investment thesis, so stay tuned for that one. If you don't want to miss any of it, please subscribe and hit that notification bell. And if you like these kind of videos and these kind of series, because I'm planning to do more, please leave a like as well, because that signals to me that this is the kind of stuff that you would like to see, like unique, unknown businesses that are potentially undervalued and that you can have a look at and have some in-depth analysis on YouTube. So let me know in the comments down below as well what you think of this video, and hope to see you guys tomorrow.